David Pakman is a partner at the venture capital firm Venrock. He's with me now. Had some very good tweets. Before we get this, do you agree with Jamie? Do you agree with that position? Because it often seems to me like it is the 90s. Not exactly again, but the fundamental principle remains the same.
I think there's a pattern here that's worth observing, Richard. Whenever a legacy industry is confronted by a new set of technologies or a new distributed way of gathering people together, they're often dismissive of it and they move to restrict it. I'm thinking of the music industry confronting MP3s and digital downloads, or the television and movie industry laughing at YouTube or dismissing Netflix. Social media being dismissed as nothing more than a place that we take pictures of our lunch and post pictures on. Dating apps having a stigma. Electric cars being laughed at by the automotive industry. And now the financial services industry being dismissive of crypto and Bitcoin. This pattern has been well established. And here what we're seeing is a largely decentralized, loosely organized group of retail stock investors, in some ways being stigmatized as being called Redditors or dismissed as not knowledgeable. And yet that's really not the case. They have access to tools, they have information. Yes, they're individual investors, but they're acting in a group. And I think it is different than the 90s because they can trade with low or no commissions, have access to much more information, research about companies, but they are a force to be reckoned with. It's a distributed, large grouping of power, and the centralized authorities are not used to dealing with that.
No, but and the centralized authorities may have to accommodate. But the golden thread of principle surely must remain is that markets mustn't become unruly. And what we saw over the last few days in these stocks, and I'm going to use American Airlines or BlackBerry or Nokia as an example rather than GameStop. You know, American Airlines is a large company with hundreds of planes and hundreds of thousands of, over 100,000 employees. The last thing in the middle of a pandemic it needs is to see the capital markets rocket and drop its price that make it even more difficult to run the company during a pandemic.
Sure, and short sellers and activist investors who are professionals and work at Wall Street firms have existed for years and have placed tremendous stress on companies and forced change. So this force is unruly and harder to reckon with. It's also harder to negotiate with. There's not a single investor for you to go and talk with. But to accommodate is to first understand, and this is a fundamental change to the market dynamics. It's not just a bunch of institutional traders. Retail investors are a force to probably be understood and in a humble way.
If you're going to understand them, do the retail investors, they're obliged to play by the same rules, and that of course means no collusion or conspiracy in terms of their trading strategy, and yet they can, and sort of, if you like, hunt as a pack, but they shouldn't then be surprised when the Robin Hoods of this world turn around and say, our first responsibility here is to ensure an orderly market.
And I think these platforms have really hard calls to make. Do they stop trading of stocks? Do they cut off individual or group investors? And the exchanges also have hard questions to make. When do the circuit breakers kick in? I don't envy these decisions. They're hard. But what will inevitably come next is a decentralized marketplace without centralized authorities making those calls. That is the future that will happen. It may take a long time, but we're not going to have just a small number of individual organizations or institutions trying their best to establish order.
David, excellent to have you on the program. We will talk again about this. I'm very grateful that you took time to talk us through this. Thank you.